Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, March 6, 2019. But this one will be quick. I know I say that all the time and I just keep talking, but I'm not going to sit here and cover the same things I've covered over and over lately. That's in any of the market analysis. Even if you haven't caught up on all the posts, just go on to the homepage under market analysis, and then most of the videos are there under equity market analysis. So let's just talk about what happened again. Just another down day. Confirmation on those bearish engulfing candles. You had this again on SPY. There's your bearish engulfing candle, engulfed that previous candle. And so as of now, if we zoom in really tight where we closed today, yep, I caught it. You can see that we've already wiped out last few weeks of gains so far. And again, most importantly, and I spent a lot of time talking about it in the video today, look, anything is possible. This market can turn around and rip up tomorrow. It's possible. So don't get married to any one view or the fact we must go down. But right now, I see nothing but check marks across the board. And today's price action, I can't say it couldn't have been more bearish, because obviously the bigger the red candle, the more bearish it would have been. But everything I saw today just confirms those recent the topping sticks. And remember, a bearish engulfing candle after such a prolonged uptrend at major resistance, when this a decent case can be made, it's a bear market rally. The bottom line is that has the potential to be a trend reversal stick, not just a pullback stick. So as I covered in the videos today, added QQQ back as a short again. We have SOXX, TVIX, some other ones. I'm treating those now as tactical short-term pullback trades, but I may open those up to longer price targets, and then again, that's up to you whether to decide to book quick profits or even reverse those trades. But as of now, I just wanted to say that everything still looks good for a much deeper correction than what we've seen so far. And if we get some more follow through tomorrow, I'll start focusing on maybe some additional targets. But right now, again, QQQ has the targets. I put up targets for IWM maybe in the trading room today. Let's just look at all the other major indexes real quick. QQQ. The Qs, I'd like to see a little more work done there. Again, this doesn't look like anything scary topping-wise, but we did break the trend line, at least the way I have it drawn here. That's the same as I have it drawn on the 60-minute chart. And then you have a minor trend line here. I'm going to show you some things on the futures here in a second. A couple where we closed. Pretty much we closed on support. You can see it there. There's a trend line. I'll bring up the index futures here in a second. But I just kind of wanted to do a broad overview. So there's QQQ failing at resistance. Again, nothing but, well, I take that back. Everything else but QQQ looks very bearish, but I talked about that. We've had a handful of those big overweighted stocks holding up QQQ lately. But when you look at the rest of the market, because of all the indexes I track, and I don't cover Dow much because it's only 30 stocks, but even then, 30 stocks in here, this is a much more diversified index than QQQ. QQQ, like I jokingly refer to it as, is XLK, which is the technology ETF with an Amazon kicker. That's what I look at QQQ as, because it's 60% tech stocks. It's a tremendous overlap. The charts almost mirror each other, QQQ and the XLK, the technology sector. So when you have the Dow, even though you have 30 stocks, it's representative, more representative of the entire economy. QQQ, for example, doesn't even contain any financial stocks. So it's lacking certain sectors. So where I'm going with this is the stock market is correcting. Now, I cover QQQ a lot because I like to trade it for that one reason. Tech stocks move faster. They're higher growth companies. When the market's going up, they go up more, just like the small caps, which we'll get to in a second. But when you look at the Dow, that is a very big bearish engulfing candle. Two more confirming sticks. And then let's look, large caps aren't everything. We have the mid caps. Mid caps clearly moving lower lately, as are the small caps. Here is that MDY. I don't cover it much, but it is very tradable, very liquid instrument, and I did cover it back before the top. Back here, I gave you these targets: T1, T2. Things get ugly too, and then my if things get very ugly target zone, which we actually overshot, so things got very ugly and then some. And we've come full circle now. So again, if this is a bear market rally, it really fits best if we stop here, but it's not the, it doesn't mean we can't have another thrust up. That's one thing I should probably mention now. Even right after the bottom, I started talking about a scenario that would look like this. We came up, at least on SPY, exactly to the top of my upper bounce target zone. And I figured we'd see something like this along the way. And we never got that pullback, that A, B, C. We got an A, but not a C. So what I'm getting at is we don't have to have that. It's not how things have to play out. It's usually how corrective phases work. But we could still get something like this and fall shy of the highs. We could even just clip the new highs. If we clip the new highs and the technicals were confirming that, let's say we had some negative divergence, something like this, that would be a beautiful scenario. And we may be looking at that in a few weeks or a few months if this market makes another thrust up. And I'll be very clear right now, if we get there and that happens, and I can make a solid bearish case, will not change a thing. If I can't make a solid bearish case and we break out the new highs, then I'll tell you my thoughts at the time. But as of now, let's just focus on today or tomorrow, next week, and we'll go from there. So there's MDY looking pretty ugly so far, but got ahead of itself. So it's way too early to say this is anything more than just a correction with the uptrend to resume. But like I said in today's video earlier today, things can happen fast in the markets, and you can see a waterfall sell-off at any point in time. This market has been plagued with one-sided trades really going into the beginning of last year with these sharp corrections we had in early 2018. This sharp correction here, some big back and forth. So just takeaways, don't underestimate how far we can go down or how far we could go up if things turn around. So that's that. IWM, wow, I mean, look at that move down so far. Wiping out weeks right there of candles in just a few days here. Last 3 days really took down, all these gains here. But we are coming up on some support there on the daily. I have different boards than IWM, but let me get to, let me show you something else. Oh yeah, here's what I want to look at. Okay, so that's the markets. Again, I don't think the correction is over. I'll say that very clear. Could be wrong, but I don't see it. I think there's more downside to come in the coming days to weeks. Doesn't mean it has to be a straight shot down. Probably won't be, but a couple other things to look at. Treasuries, starting to see look at this flight to safety bid here. That tells you the institutions are not taking this pullback lightly. They're not dismissing it. Smart money flocks into treasuries. And so you're seeing we overshot. This was a support level right here. We overshot it one day, one red candle that probably blew out a lot of longs and sucked in some shorts, and now it's being reversed. So treasuries probably continue they'll probably continue to show strength here in the coming days to weeks if the market continues lower. What else do I have for you? Oh yeah, junk bonds. Junk bonds are usually a tell. They trade closer in line with equities than they do other bonds, particularly treasuries. As far as bonds go, they're about the polar opposite of treasuries. Now, they are bonds, they're the same asset class, but they tend to go down with the stock market and rally along with it. So you had a nice price channel here. We broke down. So junk bonds just broke down. So what to watch for? Here's a nice downtrend line. You can see it right here. Comes all the way back off late 2017. We just popped above it. Really weak, lackluster breakout. You can see that's not the type of breakout you want to, or impulsive buying that you want to see. It was, waning momentum, and now we've broken that. There was a support level there. It's broken, and more importantly, this price channel. But we're coming into back tests. So I personally, I wouldn't be shorting junk bonds here because we have a key trend line that may back test. But if it fails that trend line, breaks below it with conviction, then all that was a failed breakout. That's bearish. And if junk bonds start going down, especially if they tend to, let me say this right, relatively outperform the stock market. What I mean by that? Well, they're bonds. The stock market drops 2% in a day. Junk bonds probably aren't going to fall 2%. I don't know. There's probably not a hard set correlation there, but if just look at the candles, if you see more impulsive selling in junk bonds, then that's a tell. And it was also a tell right here. You can see the bonds top, yeah, just shortly before they went down at that point in time, mostly with the equity markets. But keep an eye on it, because that the bigger picture here, this helps talk about the outlook for the economy too. Junk bonds are perceived to be a tell for the economy, because a lot of those bonds are on the verge of defaulting. That's what makes them junk bonds. They're below investment grade. And so here we are, the stock market in earshot, or stone's throw, I should say. SPY the other day, or the S&P 500, was within 5% of its previous highs, all-time highs from last quarter in 2018. But look at junk bonds. They topped back in mid-2017. Nowhere even close to that high. So that's something to keep an eye on. That tells us that, look, okay, this is late stage expansion, early stage economic contraction activity here. When you see junk bonds trending lower, so in other words, I don't have the stock market overlaid here, but this is where the S&P 500 and everything else peaked right here. And yet junk bonds had already been going down. That's divergence. That's not a good sign longer term. So that's more of a fundamental thing, if you will, than technicals, although I'm using the technicals to make the case that, hey, something's going on with junk bonds. And just a couple sectors to look at. I took the time to do a video. Whenever I do a video on a sector, obviously I think there's something there. I won't spend half an hour. Well, that's 20-30 minutes of my recording time is plus a couple hours of prep time if I don't think there's something there. So XBI, look at that big follow through today, down 4%, but now it's at support. So that's one reason I didn't add it. I threw it out there. May have a lot more to go. If again, it's all going to hinge. I can tell you this probably clearly here. Not 100%, but 80+%. Whether that longer-term bearish case I made in XBI, if this is just a bear market rally like that last one was, and we're going a lot lower, will depend on what the broad market does. So if my preferred scenario that this was likely a bear market rally, then in the stock market, I'm saying, then XBI will be heading a lot lower. If the stock market is going to correct and go to new highs, that doesn't mean XBI can't go down, but you're probably not going to see a waterfall sell-off. But I can say that too. There have been corrections, pretty steep corrections here when the market didn't. So it is possible, but unlikely, because it would be swimming against the tide. So either way, bearish action. But again, like I said, right there was pretty decent support. You can see a former resistance zone. And I'll continue to update this one. And of course, if anybody's in it, I'll be glad to provide updates. And I did, the sister trade to that yesterday was XLV, healthcare stocks. Look at these two red candles. We haven't seen red candles like that. You go back for a long time. Where do you see those red candles? Just a quick glance. You see these, I'm talking the two big red candles there. You see a couple there, a couple like that there. You see a couple here, although that, there was more to come from that point. We had a kickback rally. In other words, you don't see them during these uptrends like this. I'm making a mess with this chart. Sorry, guys. Looks like a Christmas tree. Take it off. But you kind of see where I'm going here. You typically don't see it. You see a couple red candles here, not as big, but that was at the end of a correction. You can see that towards the bottom. When you see, when you start seeing them at the top after an extended uptrend, that's not good. So, like I've been saying all along, and a takeaway from this kind of goes into the broad market. If that scenario that what we've just witnessed was a bear market rally, with as sharp as we've gone up, what you can expect very soon in the broad market is something similar. Very impulsive selling and a resumption of the downtrend. That's how the an Elliott wave, it would be the beginning of the all-powerful, or it could be wave 3, primary wave 3 down, and you do not want to be positioned against the trend and a primary third wave down. All right, one more sector, and then we're going to look at futures and wrap it up. Turn back on my annotations. And I've tried, I've been very busy lately. Wanted to get to The follow-up, I had somebody ask, it was January 30th or 31st. I did 2 videos around that time, the long trade ideas. I had a lot of longs that stood out as compelling. A lot of those trades went up double digits. There were too many to make them all official trades. This was one of them, XHB. If you guys recall, we were bullish and long the home builders. I think I used ITB off the lows. We tried it one time, if memory serves me correct. Now that may have been the regionals. I added them both back. I got clipped out here I think a day or two early. Can't remember if I put on the home builders there, but then right when I got back from vacation on the first pullback, we got it. So we got milked a lot of that rally. Left some on the table. But again, on that video I did just over a month ago, this was my final target, if you recall. We hit it quicker than I thought we would. I talked about that target being hit sometime this year, and it certainly was, but that was a big gain. And the point I'm trying to make is that was my final target, maximum target, and this is a target that had I had that as an active trade, and I wish I would have, and I was watching this, I should have probably added it. Been a little gun shy lately with the resiliency of the trend to add shorts, but that was on a scale of, 1 to 5, that's close to a 5 for an objective short entry. Extremely overbought. Housing's rolling over. I watch a lot of indicators. I watch a lot of things. Supply is increasing in the market. Homes listed for sale, days for sale. The housing market is slowing. The rally was priced in. It was technical. These guys got really oversold. But look at that run in. You don't get much better than this. That was on a scale of 1 to 10. That's close to a 10. That resistance level. That's what was my final target. It was. You can see the waterfall sell-off when it broke, right here. Wrong tool, but I'm just trying to show you. So that's when it broke, right there. And then you have, of course, this downtrend line right here. Let's see if I can get the right tool. There it is. So this is what it's intersecting resistance. 2 very strong, solid, well-defined levels, and they've only just reversed. Let me say that right now. I think there's more downside to come on the builders, which would have added them right there. But so the point I'm trying to make here, I picked a few sectors that across the board I'm seeing this. The market, a lot of sectors running into very key resistance, extremely oversold. So even if this is not the start of a new leg that's going to undercut the lows, at the very least it's probably the start of a swing tradable correction that could go home builders, I think, back down to that level. I think this is about where I covered them a month ago and said if they break out there, that would be your buy point. That was a very solid a pretty solid well-defined resistance level, and that would be a natural pullback target. So there's one trade idea. All right, now on to the futures. A few hours ago, I'd have to update this and refresh it, but it was a little before an hour, maybe an hour and a half before the markets closed. I posted these 3 charts on the futures. Keep in mind, too, guys, when you click on a chart, either on the front page or in the trading room, and once they expand, you can scroll with your mouse scroll wheel. If you do not have a scroll wheel on your mouse, I suggest throwing that mouse you have in the garbage and buying one. It's an invaluable tool. Surfing the web, scrolling pages. I couldn't imagine trying to function on a computer without a scroll wheel. So I'm rolling the scroll wheel. And what that does, then you click and hold to pan. So scrolling zooms and then clicking and hold pan. So if you really want to get in on a level, say, okay, what is that line right there? Well, that's orange. You can see it's right there, 7003. So that's 704. That's a level I'm watching from those reaction lows on the 21st, and you can zoom in and see the other levels where they're at, or any details on the chart. All right, so why am I showing you this now? It was this support level we had fallen to, and I said I expected a minor reaction off that level because we just hit on the initial tag, and that's what we got. I'll get to the updated charts in a second. Next one up, well, in that same series of charts, small caps had a beautiful breakdown of that trend line right there, that price channel, and then boom, right to support level. That's at 1537. It was at 1544 when I posted it. Same story. So you have multiple indexes, all the major ones, at least the ones I follow, the S&P 500, small caps, and the Nasdaq 100, all at or just above support. And again, that was about an hour and a half or so before the market opened. And I want to show you where we're at now. All right, So pretty much around the same levels. The bounce is, you'd have to look at it on the 1-minute chart. So this is ES. We're still above that level. If you recall, I've been wanting for the last couple weeks now to really increase the odds of more downside. See the lows from the 21st, February 21st, Thursday. That reaction low get taken out. And there's also a support level as well. So SPY is, or ES I should say, the S&P 500 E-mini futures are a little bit above that. Same story, yet another divergent high, impulsive move. And when we look at the 60-minute charts, you see the nice little minor downtrend line there, broke down and back tested the other day, and we've been moving lower since. So for all said and done, futures traders, at minimum, I guess is we're coming back down here at minimum to about 26.92. Wouldn't surprise me to get down here, and then remember, if we go much lower, we get to that WTF zone that I talked about in today's earlier video. So that's the S&P 500 futures. There's Nasdaq 100. Another trend line you can see we're right at. That's that same trend line. These are 60-minute candles. When we first hit it, we're here. There's that little bounce. Certainly tradable, but not anything. I didn't bother reversing myself. I just stood tight. And then look, we closed right back on it. So here's the story of today. We fell to support. This, as I often say, the initial tag of support when it hasn't been tested in a while. Not literally the initial tag, because you wouldn't have support on the first tag of a line. I'm saying for the first tag in a while, you usually get a reaction. But today's reaction, unlike these others, you hit them, you exploded. You hit them, you exploded. Those were buying ops. At the end of a trend, which this warns us, these divergences, the reactions are muted, and you either get a minor one or you just break through it. So bottom line is right now, tomorrow, maybe tonight. Don't read too much into what the futures do overnight unless it's a huge move. They're going to whip you around. But look for that level to get taken out. That would be our next sell signal. There's the next support. That's the lows from the February 21st. I want to see that taken out. And then you can see some potential swing targets for NQ traders. All right. And then, of course, small caps. Here we go. Small caps. Did I already cover that one first? Yeah, I think I did. Small caps, and I did S&P 500. No, okay, so S&P 500 closed on support. There's that line. Sorry, I looked at so many charts today. And there's the Russell 2000 futures, small caps, RTY is a symbol. And that's a pretty good support too. So if they close right on support as well, but not looking good. This is a breakdown that just occurred. If there's still a voracious bid in this market, or if something happens and the trade wars, a positive announcement, and the markets want to run, anything's possible. But now, here's the thing: if we do get a news-induced pop or something, Trump tweets something out there to try to lift the markets. Now we have some resistance levels overhead, backtest these trend lines, things like that we can look for, because we've had some pretty decent sell signals. So, a pop at this point isn't going to do much unless we get back over last week's highs. That's the bottom line. All right, let's go ahead and wrap this one up here. And again, we'll see what happens tomorrow, to be continued. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.